Hey guys, welcome back to the Retail Compass. So last week we had the very good bounce of the 100 days moving average and around this level, this line which I drew out. I drew this line in my last video. I didn't draw it retrospectively. So yes, for those of you who actually took a small trade there, congratulations. But otherwise, I think let's look at where the market is right now after this big move up. So first, let's look at why the market ever move up. I think if you look at the velocity of the previous down move, I think a lot of investors actually kind of capitulated. They bought a lot of downside protection. If you look at this total SPX put option volumes, it actually spiked up. This is, I think, as of last Friday. Basically it had a very big spike. Basically this actually marked a peak near-term fear levels, and that's why correspondingly when we had this chance, which was the previous support, the market bounced off pretty fast. So right now, of course, Fed also seems to have a higher chance of cutting in December again, because various people have come out to seem to signal dovish. So we can clearly tell that the market is attributing more weight onto Fed than actually AI, because now that you think back, people have actually stopped talking about Nvidia results anymore, right? Obviously with Google coming up and seemingly getting a lot of attention, I think that's more of a rotation within AI. But overall AI, while good news, still managed to bring up the overall market higher. I think in the near term, Fed will be the number one driver. But now let's look at this. So I think we are still trading in a kind of a downward trend. So we had lower lows, and right now it's key to see whether we can actually break out of this, I would say 6,900 levels. So do be careful, because we are approaching this downward trend line resistance. So I would say this is a crucial turning point. But otherwise, if the market gives you a chance due to some reason, a slight correction again, back to, I would say, 6,720 levels, please consider buying the dip, because this move is very strong. You can see that yesterday when the market tries to sell off a little bit, immediately the dip got bought up. Because why? A lot of people, they may still have not unwind their shorts. They are caught offside. They are looking to unwind their shorts when they can, and people, I think, sentiments are changing, moving back to buying the dip regime. Because two things I want you to take note of in December. First, I think Fed is finally ending QT in December, and also there was the TGA balance, which they will likely US government will be spending that down, right? And also Fed chair will be nominated in December. So even if the market have a sell off, I think Trump or the government would take the chance to nominate a dove into the Fed chair. And if the Fed chair becomes a dove, do you think the market will actually care? Even if the Fed doesn't cut this time, they will look forward, and then the market will rally. The debasement dollar trade will probably come back again, and that is why I think you look at gold. Gold is kind of finding decent support in uptrend. I flagged this in my earlier videos as well. So right now I think gold is another one that's trading in a narrow range. If they really nominate a dovish guy as the next Fed chairman, I think gold will have a good breakout. So if we do get a correction again, back to 4,000 or even maybe 4,000 levels, if we get there, please do consider buying the dip as well. So last but not least, I think one market that haven't been talked about that much is China, especially China tech. If you look at China tech, it's come down almost 20+% from the peak, and we dropped below the 200-day moving average for a little bit, but we recovered now. So I think looking at the price action again, I would say if you look at monthly chart as well, this is a very strong candle. So I strongly, suggest again, if we get corrections here and there to maybe 1% lower around 5,500 levels, you can also consider taking up a tactical trade. So yeah, that's all I have to share today. And again, I'm fully transparent in my views, and I share the thoughts behind why I form these views. I may be wrong, of course. Everyone is wrong from time to time, and I'm not afraid to admit when I'm wrong. So I'm just always trying to analyze the probabilities, which event is more likely, and how people are positioned, as that's what at the end of the day markets or trading or even investing is all about, right? So yeah, that's all I have for today. If you want to be updated, do click that subscribe button so that you don't miss any updates. Otherwise, invest safe and take care till the next time.